$3,138. That is the average U.S. tax refund. Stan got his this morning. Stan thinks he won. Stan is wrong. Welcome back to the funeral. A tax refund is not a gift. It is your own money that you already earned, that the IRS held for 12 months without paying you interest. You didn't win. You got back what was already yours. In 2024, the IRS issued 104 million refunds, average $3,138. 104 million people, $3,000 each, spent on TVs, vacations, down payments on car loans, bigger TVs. Stan is going to spend his on a slightly nicer mattress. He has been wanting one for 2 years. He could have bought it 9 months ago with money he already had. Reason 1. You are loaning the federal government money for free. Stan's $3,138 wasn't sitting in a vault somewhere. It was withheld from his paycheck, $60 at a time, for 52 weeks. $60 every week for a year, sitting at the IRS, earning 0 interest for Stan. If Stan had kept that money in a high-yield savings account, even a boring one, he'd have earned about $150 in interest. In an S&P index fund, more like 320. Both numbers are larger than 0, which is what the IRS paid him. Stan cannot borrow $50 from his own bank without paying 8% interest. The federal government takes $60 from every paycheck for 52 weeks and sends it back with a thank you note. Stan is paying the IRS to babysit his money. Funeral number 1. Reason 2. Refund money does not behave like normal money. Behavioral economists call this the house money effect. Cash that feels free even when it isn't. Stan, holding $3,138 he was waiting for, behaves differently than Stan holding the same amount he saved up $60 at a time. The numbers say this is real. Studies of refund recipient spending show about 70% of a typical refund hits discretionary purchases inside 30 days. That same Stan, given the same $3,000 from his own saved-up account, would spend less than a third of it in the same window. Same Stan, same money, different label. The label is doing all the work. Refund cash feels like winning. Saved cash feels like working. It is the exact same cash. Funeral number 2. Reason 3. Stan is using the IRS as his savings account. Stan knows this, somewhere in the back of his head. He has heard people say, withhold less, save the difference yourself. He has not done it. Because, deep down, Stan does not trust Stan. He thinks if the money hits his checking account, it just disappears. He is probably right about that. This is not a stupid choice. It's just an expensive one. There's a version of this where Stan sets up an automatic transfer from each paycheck into a savings account. The discipline is the same. The outcome is the same. $300 more every year for the rest of his life. Reason 4. The refund is the only time of year Stan thinks about taxes, which means it is the only time of year Stan thinks about money in any structured way. Once a year, for 3 to 7 days, Stan is a financial planner. Then his refund hits, and he is a consumer again. You cannot run your finances on a single weekend of attention per year. This is part of why 1 in 3 U.S. lottery winners is broke within 5 years. Different scale, same brain. Funeral number 4. Here is where most videos try to sell you a hack. We are not doing that either. There are 2 things. 1. Fill out a new W-4. Reduce your withholding so next year's refund is close to 0. The IRS has a free calculator. It takes 10 minutes. 2. Whatever you used to give the IRS for free, send to a savings account automatically. Every paycheck, $20, $50, $100. Stop overpaying. Start auto-saving. Keep your own money. 2. That's the list. There is no third thing. Stan filed his new W-4 last month. His refund next year will be close to zero. He is going to be okay with this, because the $3,000 is showing up in his account $60 at a time all year, and it's earning interest. Stan eventually learns. Next week we are burying credit card rewards. They have it coming. Subscribe if you want to be there. Stan out.